incredible panel. Joining the stage right now, it's a panel surrounding companies building the global cannabis opportunity. The Avengers are forming behind me. Leading the panel will be none other than Paul Simeon. Paul, take it away.
Hello, everyone. My name is Peter Simeon. For those of you that don't know me, I'm an attorney in Toronto, practicing capital markets and corporate finance. Also co-head of the Cannabis group. I've taken a lot of cannabis companies public in Canada in the last 5 years. We've got a great panel here. We're going to be talking about the companies that are building the global cannabis opportunity. We're going to start by just having each of the panelists introduce themselves and then tell us a little bit of what their companies do, and then I'll have a few set of questions. So maybe we'll turn it over to Jonathan.
Thank you. Yes, Jonathan Lubosch here, CEO and founder of iuvo Therapeutics. We're one of the few German groups, GMP certified, able to import and market release new products into the European Union. We have an international supplier base in Australia. I've just qualified one of the major players in the Canadian industry and look forward to expanding our current product portfolio of broad spectrum extracts in Europe with flower products as well in the future, and look forward to being a first mover in the pharmaceutical space, but also in the recreational space as it unfolds.
Great. Oren?
Yeah. Hi, everybody. My name is Oren Shuster, and I'm the CEO of IMC. IMC is one of the first companies that started to grow medical cannabis. We started in 2010. IMC in Israel. Today, IMC operates in Israel, Canada, and Germany. We have done acquisition of 2 companies in Canada last year in the premium and ultra premium segment. In Germany, we're working since 2019. We have over there a distribution center and the EU GMP facility. And we're building an international supply chain now to all of our operations. The company is publicly traded in NASDAQ since last year. That's about IMC.
Great. Michael?
Hi, Mike DeGiglio, Village Farms CEO, founder. We have a number of different businesses. We've been around 30 plus years. We have a legacy produce business. The company actually started cultivating large scale and cut flowers, migrated to produce, and in 2016 into cannabis in Canada. I think we have one of the largest production footprints in Canada, if not the world, based out of British Columbia. I think one of the more successful companies in Canada, which is a very difficult market. We also have a company that we're majority owners in Quebec called Rose Biosciences. We recently acquired a company in Colorado, one of the leading CBD companies. And we are going to be one of the 10 license holders in the Netherlands for what is going to be the first country in the EU for recreational cannabis. And we're working with some partners in Germany on export of EU GMP product from Canada as well.
Great. Luis?
Good afternoon, everyone. My name is Luis Merchant. I'm the CEO of Flora Growth Corp. We are a NASDAQ-listed company under the ticker FLGC. Our company is a global company that is focused on 3 pillars of operation. The first one is our cultivation facility and our manufacturing facilities out of Colombia and the United States. The second one is our portfolio of brands and products across multiple consumer segments that are being distributed in already over 12 countries across the world. And the third one is our life science division focused on scientific-based research.
Richard?
Thank you very much, Peter. I'm Richard Carlton, the CEO of the Canadian Securities Exchange. For those of you who don't know, and obviously I'm the outlier on the panel because I'm not, in fact, an operator in the cannabis industry, but we made the fateful decision to list the first Canadian applicants for licensed producer status back in 2014, which enabled a significant amount of public capital to flow into an industry that was not receiving investment from private sources or bank loans or other traditional sources of finance for startups. And that, as I say, fateful decision led us to become the early leader in the listing of cannabis companies in Canada initially. And then we had some interesting folks knock on our door in 2016 from the United States. And after a lot more research and thought and a lot of criticism from various quarters, we agreed to list companies based in the United States in Canada, which means that today, of course, all of the significant multi-state operators in the United States are listed on the Canadian Securities Exchange. So what we think about in terms of helping them build their cannabis businesses, the role of the exchange is when you take everything else away, is to reduce the cost of capital for our issuers through a whole variety of different things, whether it's liquidity or rules that enable them to raise capital, to provide access to different investors from around the world to trade these securities, to be able to custody the securities, and to take care of all of the pain points that everybody's very familiar with. So what we're looking to do is work with the industry, continue to work with the industry, and I'll go through a few things later in the panel, how we're trying to make the public capital markets experience better for the cannabis industry in Canada and beyond.
That's great. So my first question is going to sort of center around some of the international operations. So early on in this industry, a lot of people went to, one country or even one state or one province and got sort of single licenses. And then as things have evolved, people, especially in the US, went to multi-states. You see the MSOs. And in Europe, you've seen many countries and multiple licenses. So, at least 2 or 3 of you have licenses in multiple countries. Maybe sort of, walk me through why you decided to go into other countries and sort of the challenges you're facing in being in multiple countries with different regulatory regimes.
Sure, happy to speak to that. So as Germans, we do all honor to our bureaucratic stigma. We have high barriers of entry, and going from Germany into other European countries is comparatively easy than vice versa, right? So we Germans do have that accredited high standard of qualification. So for us, it was really, let's succeed in the most challenging regulatory landscape and expand as those markets open. And specifically for Europe, it's actually Germany that for once in a while is really being a first mover here and trailblazer for the other European countries as they open. And I say that as a German, we're very lucky to have a gentleman here in North America kind of take the first step there, so we have something to learn from.
Yeah, no, Oren, so what challenges did you face when, you started in Israel and you expanded, you go into Germany, you made a decision to come into Canada? What were some of the biggest challenges as you went through that process?
I think that our challenges is mainly in the supply chain. We are working in 3 countries. Each of them is different regulations, and this industry is all about regulations. In Germany, it's EU GMP. In Israel, it's different kind of GMP. In Canada, it's completely different. And what we found out is that at the end of the day, the common denominator is the highest or the toughest regulation become the standard for us. Because if we want to export to Europe, we have to be EU GMP certified. And if we want from the same facility to bring product to Israel, it has to be IMC GMP, which is the Israeli GMP. So at the end of the day, we found ourselves meeting all the regulations in the toughest places in order to build the supply chain.
And what made you decide to come into Canada?
It's very simple. Our markets is premium markets. When I say premium, is the price that patients pay in Israel and in Germany is premium prices. And my philosophy is if someone is paying premium price, he should get premium product. That's the main reason that we decided to go to Canada. We acquired 2 companies that specialize in the premium and ultra premium segment. Also, I don't believe in the value because for most of the company, it's a race to the bottom. And in Canada, there is overcapacity, I would say today, and we thought that it's an opportunity because our markets, I'm speaking about Germany and Israel, is growing and will grow significantly in the coming years.
Yeah. Michael, why don't you talk about sort of taking your expertise in the greenhouse space and then turning that into cannabis, and sort of what, differences there were, what challenges you faced sort of adapting, to the cannabis market?
Well, everything we really have done in 3 decades is built on a foundation of cultivation, excellence in cultivation, and it's not for the weary, I can tell you. We've hit the wall many times, and I think one of the attributes we have is that we've made many mistakes in 30-plus years and learned from those mistakes. So we look at it, in order to build a very successful brand, either within a state or a country or globally, agricultural-based CPG companies are very much different. You have to get the cultivation right. And if you don't get it right, meaning the right quality at the right cost, have high-scale, efficient operations that can return the lowest cost for the most premium product, and understand what the consumer wants and deliver that every day. It has to be rooted on a foundation of great cultivation. So with that expertise, we've changed crops a number of times in our life, and cannabis, although different, was just another crop that we had to get behind and learn. And we focused on that to win in Canada, and I think today is the #1 flower brand, probably #1 or 2 in cannabis. We were able to prove that theory out, and it's something that we want to leverage now into Europe. And by the way, we really didn't go into Europe till we felt we got it right in Canada. And with our EU GMP certification, I think one of the first greenhouses to do that, which people said could not be done. We're gearing up now for Europe, now that we've got Canada sort of where we want.
And sort of what markets in Europe do you think are going to, boom, and where you're looking to get into in the next, 5 years?
Well, we're going to work in Canada 2 ways. One, exporting out of Pure Sun Farm. Today we're exporting to Australia, and we hope to start now with Germany on our EU GMP certification in the next few months. And when we look at Germany, we see a market that most likely will be built on imports to Germany, be it medicinal or recreational future, whether it's from Canada or even other countries in the EU. But then there are countries like the Netherlands for recreational, where, as I mentioned, we're one of the 10 license holders, which we're very proud of, that mandates cultivation within the country. And so it's a 2-prong approach. And then we'll see what happens. If countries adapt the Netherlands point of view for recreational of production within the country, we'll leverage that knowledge up of the Netherlands. And if it opens up to the whole EU, then we'll do what we do best, find a location for very large-scale, low-cost, high-quality cannabis for exports to other countries in the EU. That's our 2-prong plan for the European Union.
That's great. So, Luis, you took a bit of an opposite approach with outdoor cultivation. Why don't you sort of give us your thoughts on why you went that way, the benefits, versus, what obviously Michael's doing in the greenhouses?
Yeah, I think there's a fundamental question that needs to be asked, and I think it's the reason why we're on this panel, and is whether or not cannabis will become an international trade or a local or regional one. And we firmly believe at Flora that cannabis will become a global trade. And for that reason, from a wholesale and cultivation perspective, we want to be in a region of the world in which we can grow cannabis at a competitive production cost. Eventually, when trade barriers go down, when the regulatory framework stops being a patchwork of multiple legal structures across countries in the world, prices are going to go down. And those companies that are able to deliver high-quality product at a low production cost are going to be the ones that take the market share. For that reason, of course, we're growing outdoors. We're now proving production costs of about 6 cents per gram of dry flower. That being said, we firmly believe there's also a space for premium product for certain segments of the market. But what we firmly believe that outdoor grow will be the way to capture a significant portion of the market share across the world. I will highlight also that Oren mentioned supply chain as being one of the, if not the biggest challenge that cannabis that want to play in the international landscape are facing today. I couldn't agree with you more on that for a number of reasons. And I think the biggest one being the regulatory framework, but there's also others. This is a less than a 10-year-old industry. There are no experts in supply chain for cannabis. And so the people that are on this panel, the people that are on the room are figuring it out on a daily basis, how to move products from point A to point B. That's why we have a diversified product strategy, because we believe if we establish good partnerships, if we sell our CPG products, if we sell some of the categories that have lower barriers of entry, once the high barriers of entry become more accessible, we're going to be able to flow our other portions of our business.
Yeah, it's great. Richard, well, why don't you chat about some of the challenges companies face when they list and go public, and then how, you know, as an exchange, you make that easier and try and help them along that process?
Well, I think if you talk to any of the cannabis CEOs here, there's a big frustration in terms of the how much retail participation there is in the stock across the board. Whether you're listed in the United States, one of those are non-plant touching companies, or whether you're like Oren, dually listed between the Canadian Securities Exchange and NASDAQ, that they tend to very much move as a group, and that one company reporting spectacular results isn't necessarily going to be rewarded as a company in another consumer packaged goods company. Instead, what you'll see is the whole group will come up, the whole group will go down collectively, and there seems to be very little discrimination. So one of the things is the exchange that we had to deal with in the early days was all of the companies were getting bombarded with requests from US retail investors. How do I buy the stock? You're listed on the Canadian Securities Exchange, and my broker won't direct an order from the United States to the CSC. So that's when we worked with our partners at the OTC Markets Group in New York City to provide a US dollar market that was organized, regulated. We had to make sure that the companies got their securities eligible with DTCC, that's the US Clearing and Settlement Agency. So there was free flow of those physical securities back and forth across the border. And what that meant was that a large number of US retail investors could get, but not all of them. A lot of the zero commission brokers up until today don't provide access to the cannabis industry for their investors. And so what you see is a significant lower rates of liquidity for companies which are listed on the CSE and quoted in the United States over the counter than, say, companies like Aurora that are listed on the New York Stock Exchange as well as the Toronto Stock Exchange. So we're attacking that problem by working with those zero commission brokers who have yet to, and I'm glad to say we've made some tremendous progress. We're also doing some things like working with the index providers. So Oren, for example, is probably eligible to be in the Israel index for the MSCI, S&P, and FTSE regional indices, but he's not yet, because they don't know what to do with an Israeli company that's listed overseas that isn't in Israel, right? And so we have the same issue with the Cureleaf and the Crescos and GTIIs and the True Leaves and so on. They should be in the US small cap index. And what that will do, and we're working with the index providers to make that happen, is when you get those companies into those indices, it means that institutional investors who either have funds that are benchmarked against those indices or who track those indices with actual equity holdings will be required to purchase the securities in those names in order to be able to track performance of the index. So it's been a long, hard struggle to identify those pain points, but we know what they are. We're working towards knocking them down. And as I say, it's all about providing a better public capital markets experience for these folks, the issuers.
Yeah, so you mentioned, obviously, IMC is cross-listed. A number of the companies in the panel are cross-listed. Is that sort of a trend you're seeing more of lately? Companies are listing both in Canada and the US, and are there any, overseas listings you're seeing or cross-listings?
Absolutely. And again, I mean, that's the golden ticket to the New York Stock Exchange or NASDAQ, is not touching the plant in the United States. So that if you're operating in a jurisdiction legally, whether it's Germany, whether it's in Israel or some other place internationally, as long as, again, you're not touching that plant in the United States. And apparently you can get pretty close to touching the plant. We know that our friends at Leafly were ringing the bell at NASDAQ this morning in honor of 420, but they're not quite there. So as I say, that is definitely a thing. But I'll tell you this, people do think that, again, once you're on New York or the NASDAQ, that is an automatic ticket to massive liquidity and daily turnover in the millions of shares. It's not. The liquidity profile is very much canted towards the top 100, 150 companies. The companies themselves really will continue to have to work very hard. A sophisticated and extensive investor relations campaign to work with the analysts, work with the different broker-dealers that are covering. There really is no let-up because there are thousands of public companies in North America. Every one of them are fighting for that same mind share. And it is a constant effort that's required from company management and significant work in order to build that liquidity profile. It doesn't happen automatically.
Yeah, no, we have seen the exchanges sort of come, a little more forward in their approach on cannabis. We definitely early on, you just sort of, you're a company that just looks at cannabis, they're not going to, list you. Whereas now you said, yeah, the line is sort of moving. Hopefully it keeps moving. The way this industry is developed, so early on there was obviously a boom leading to legalization in Canada. A lot of companies got listed. The focus was on cultivation and square footage. That turned pretty quickly after to a focus on profits. A lot of companies scaled back on some of their production and really tried to cut their costs. Lately, we've seen a lot of people reporting huge revenues and profits in the last quarter or two. Where do you see sort of the market going in the next, 6 months, 12 months, 5 years? Maybe we'll start with John.
Appreciate that, but we are a German company, so I can't speak so much to, I don't want to say mistakes, but things that happened in North America. And as I said before, we definitely use it as a trailblazing experience. But maybe to just touch on the Securities Exchange. So in Germany, again, high barriers of entry, a lot of compliance, but it's fully legal. So to a German, this entire MSO US situation is mayhem, right? All of our regulatory approaches, it's public knowledge, it's very easy for us to list, also in Germany. So we'll be doing a co-listing in Germany, as well as looking into the US opportunities, and I wholesomely agree, it's not the golden ticket. But at the same time, I do see, we see a lot of retail volumes for Canadian cannabis stories in Berlin specifically, or in the German Stock Exchange. Actually, higher volumes, trading volumes in Germany for Canadian cannabis stories than all of Canada. So I think there's a clear interest from a German perspective or from a European perspective as an investor to take part in this. When it comes to the hype, very similar in Germany in the sense of we had the medical legalization. Everyone basically copied and pasted the principles from North America, and didn't quite turn out to be that way. We Germans are somewhat special in that sense. And we look forward towards the recreational opportunity, but I also look forward to our politicians and those making decisions look very closely at the North American market and take their learnings from that to do it better in Europe. I'm looking forward to that.
Yeah, we've seen a lot of consolidation in the last year. Michael, you think that's going to continue? Do you think you'll see more consolidation, or do you think you'll actually see, growth? You'll see new listings. I'm just curious what your thoughts are on the industry.
Well, my thoughts, when I look at consolidation in the Canadian market, I don't really see it have been accretive. I don't see one deal that I can look at and say 1 + 1 = 3. I think in the U.S. it's different. I think some of the consolidation has clearly worked out in the U.S. But now I think it's a very different market tied to the capital markets being non-existent. And until there's clarity in the regulatory process, especially in the U.S., and even with Canada having a clear regulation, clear regulations, there is no capital. So I think companies are going to be forced to look at selling and other creative ways to survive. And I think, you know, you have to be prudent today till that there's a change in the capital markets. So I think it's anyone's gain. But, you know, the sake of doing a deal just to do a deal doesn't make sense to us. You know, we've grown our company to be, as far as I'm concerned, we are the #1 Canadian cannabis company, and we've done it with total organic growth, no acquisitions. So that's my view. Not that we're opposed to it, but we do acquisitions where it makes sense, where it's strategic. It's got to make sense at the end of the day. And I think in the end, cannabis companies have to be profitable. You know, there's a lot of ways to measure your balance sheet today. You have to be social. You have to hit a lot of different tangents. But at the end of the day, if you're a publicly traded company, you have to deliver on profitability goals. And until that starts to happen across the board, I think there's going to be a lot of headwinds for a lot of companies.
Yeah, I don't disagree. We saw a lot of both public and private M&A last year, but a lot of that focused on U.S. companies. You know, single state operators getting bought by multi-state operators. You know, some of the privates getting bought up by the publics. In terms of the Canadian opportunities, I've had a lot of clients that are circling wagons with people, and I agree. I think values are high. People are still looking for too much for what they have. They're gonna have to come back down to reality a bit if you're gonna see any more deals happen. In terms of new listings, Richard, like what are you seeing in terms of cannabis companies? What kind of companies are coming to the exchange? Is it still producers? Is it, you know, I've seen some marketing brand type plays. You know, is it hemp? Like, what are you seeing these days?
The pipeline is big, but it's slow at the moment. And the reason is, and again, no surprise for anybody, if valuations were better for the existing issuers, we'd see more activity. But there is a generation of operators in the United States who came of age a little bit after the current big ticket MSOs at this point, who've remained private. And they've innovated in a lot of ways in terms of private capital, whether it's through sale leasebacks, early stage debt finance that's been made available, although at coupons that, you know, really make you your eyes water in some cases, although those numbers are also coming down. But with the M&A expectation high, a lot of these companies are now looking at becoming public and accessing capital through the Canadian Securities Exchange. So there is another generation of U.S. MSOs that are coming to market over the course of the year. And as I say, I think it will be largely driven by, they're more likely to show up if the whole sector rises. If valuations continue at their current levels, I think they will sit on the sidelines a while longer.
Yeah, you mentioned access to capital. I do think it's becoming more and more difficult to raise capital as a cannabis company in this environment. You know, what are you sort of doing as companies to try and bridge those gaps? Are you looking at more traditional debt? You know, Oren, like, what are your thoughts on sort of how you're, you know, raising capital? Or if you don't need it, what do you think other companies are going to be doing if they need capital?
So today it's one of the biggest issues in the industry, I think, raising capital. And I think that there is a difference between companies in NASDAQ or New York Stock Exchange, the main stock exchange, to companies with lower valuation in other exchanges. I think that we see much more debt now than equity, also because of the valuations, but not only because of that. And it's a huge challenge for most of the industry, I think, today. And if the situation won't change, I believe that we will see more and more M&As. Because companies, for many companies, it will be very difficult to operate without financing.
Yeah, Louise, any thoughts there on sort of companies raising capital in this market?
Yeah, I think to try to bring it all together, the current cycle in which we're in has brought valuations to a significantly low level. So cost of capital is exceptionally high right now. So cannabis companies are either looking for consolidation, a partner that they can actually help them find some liquidity or some access to the capital markets, or they're looking for some more traditional debt instruments. That is likely not going to change, as Richard mentioned, until valuations start to improve. But that is going to take some time. I think the investor community, as well as the retail investors, have run out of patience in terms of the potential, the long-term potential of cannabis, and are looking for some meaningful, short-term, fundamental results. And Michael talked about profitability and talked about revenue generation and long-term value. I think that is something that we're going to start to see come more to the forefront of cannabis companies when it comes to raising capital or completing M&A transactions.
Yeah, we've definitely seen, a whole sort of life cycle of an industry here where it started, there was boom, there was a bit of a bust, there was, some cost-cutting restructurings. Now you are seeing, as Richard said, you're seeing sort of convertible debt deals, high interest rates, cost of capital is very high. And then there, I personally think there may be some restructurings in the future. It may not be tomorrow, but in the next sort of 6 months or a year, you're going to see some restructurings. And I think at that point, you'll find some value. Like, if they're overvalued today, at some point, there'll be value because there's lots of great assets out there.
Yeah, I couldn't agree more. I mean, there are great companies out there. There are companies that are doing a fantastic job, whether it is with product innovation, with distribution, with great infrastructure. And perhaps not all infrastructure is well developed or is overdeveloped based on the current demand. But there's some infrastructure on the global scale that is very strategic. And if it's located in the right parts of the world, is going to be accretive to a transaction. So I think there's still accretive targets that companies should look for out there.
Yeah. Have you guys seen your businesses recover from COVID completely now, or are you still lingering effects? Because it's interesting, I'm coming from Canada, and we still sort of see COVID on our face every day. There's, we're wearing masks, and we're, still locking down a few months ago. The U.S. seems very open now, which is great, but like the businesses obviously suffered a bit when there were lockdowns, and people, and there was a boom at one point through COVID, frankly, when people were just buying a lot more cannabis. Like, where have you seen the businesses go now? Has that recovered? Are you still seeing lingering effects? Maybe we'll start with you, Michael, or?
COVID really did not have a huge effect on our operations, but from a market perspective, yeah, we did see stores being closed and other situations happening, especially early stages. But for the most part, I don't think it's affected the overall cannabis industry in Canada. If you really look at what's been accomplished in 4 years, going from basically zero to closing in on $5 billion in a legal market, that's really a tremendous accomplishment. And so even though Canada's a difficult market to win in as a LP, you have to really look at the Canadian government and say, what a win-win they created here. And if the market is at 8 or 9 billion at maturity, they're already halfway there. And I think that's a huge accomplishment that overshadows COVID. And I think you'll start seeing that back on track. But I will say, it's a very nascent industry, and we always say it's not a mature CPG industry, so the expectation that every single quarter is going to have growth and it's not going to be an ebb and flow, I think is wrong. We're going to see that over time, and sometimes we see analysts get very concerned if there's contraction in a given quarter, but I think that's just the way it's going to be till it gets more mature and more global over time. So
I will add this. I think demand has already come back to pre-COVID levels, and we are seeing an increase in demand in our product categories or our CPG categories. But now we're faced with the challenge of sourcing of raw materials, whether it's packaging or other components for our products. There's a delay in the supply chain that is impacting either delivery times or margins because of the increased cost that is coming. And I think that pressure is going to continue over the next 18 months.
Yeah, I know there are definitely supply chain issues. We heard that from a lot of clients. You know, through COVID, there's supply chain issues. You know, the war in the Ukraine, now there's more supply chain issues. So I agree. I don't think that's, you know, that's going to stop anytime soon. How are you dealing with pricing in this sort of inflationary environment? Because there was a lot of cost compression on cannabis, at least at some of the lower quality stuff early on and recently. And now with inflation just going up, costs, you know, your other sort of costs must go up. How are you managing that? Oren?
It's a good question, and I don't have a good answer yet. I think that the world is changing, and we see that the prices are going up in almost every segment that we're involved in. I don't know yet what will be the effect because at the end of the day, there is a competition. No one is working in a vacuum. So we will have to wait and see, and definitely we will see some price increase in some of the elements. In Israel and in Germany, we feel price compression, but it's still very high prices. Usually the benchmark is the black market. In Germany, it's about 10 euros per gram on average in the black market. In Israel, the black market is more expensive than the medical market, so we don't feel any price compression. And Canada is Canada. So we will have to wait and see. I think that the situation in the world is very liquid as of now.
Yeah, so we have a couple of minutes left, but you mentioned the black market. Like, I feel there's still a lot of black market sales out there, and that's, you know, leading to part of the problems. Do you guys agree? Like, what do you think governments can do to sort of crack down more on some of that black market?
Okay, maybe I can speak to that. Yeah, it's a little bit of a sensitive topic. But in Germany, for example, so why, even if I'm in Canada, I'm thinking about, am I going to the illegal market? Am I going to the legal market? Why? Just because there's certain quality differentiators, but also service differentiators. So if you look at how established and how service-friendly the illegal market in Canada is, and you think about you can order these products as an app store and partially they give better services than the dispensaries, I'm somewhat shocked. And if you compare that to the European landscape, it really is that you have to go and, you know, your back alleys, your dark alleys, and then find somebody that can help you there. So the contrast couldn't be more severe. So actually the challenges you're facing in California, but specifically also in Canada, are not the same challenges we'll be facing in Germany. We do have a very high consumption rate. Only France and Europe is currently higher. There are the estimations. There's also supposedly, or an estimation that the per capita rate is higher in Germany, per person in Germany than in Canada or the US. So it's interesting to see how that's going to unfold, but I think it's a very unique type of animal that Canada is facing. Europe or Israel has a different set of challenges.
So we got about 2 minutes. Any closing remarks, gentlemen?
Peter, I want to go back to your COVID question because there was actually an extremely important development for the cannabis industry in the demographics of the trading community. So that the 20 to 35-year-olds in Canada and the United States in particular opened their first brokerage accounts. And generally speaking, in the United States, it was a Robinhood or Webull or eToro, so one of the zero commission brokers. In Canada, the names, you know, Wealthsimple and Questrade and so on. And that is absolutely the demographic that buys and sells cannabis stocks as well. You know, was it Warren Buffett or Peter, the guy from Fidelity that said, own what you know. Well, they think they know the cannabis business, so they were investing and trading in the cannabis space. And that did actually improve the liquidity profile for a number of these companies. Now, what we are seeing, though, is that as things have subsided, trading volumes are down across the board. And whether that's driven by inflation or the fact that people are going back to work, or whether they're trading NFTs or shit coins on some platform. Did I just say that out loud? in any event, the interest level, not just in the cannabis space, but across the board, is maybe 60% of what it was, say, in the first quarter of 2021, which was the high water mark. So that's something we need to watch very carefully in the coming months.
And so you think some of these, younger millennials opening trading accounts will lead to more volume? Is that sort of the hope?
It absolutely did. And I don't know whether they've bought and held or whether they got tired and their attention span has got them moved on to something else at that point, which sounds a little boomerish, I appreciate. Sorry. But it's definitely, as I say, something we need to look at because a whole new generation of investors did enter the market and basically over the last couple of years.
That's great. That's good news. So we're now a couple minutes over. Just wanted to thank everyone on the panel. I thought it was very, very informative. Some great, banter back and forth and commentary. And look forward, to seeing everyone in the audience. If you have any other questions, we're at our booth. Everyone's mingling. We're happy to address any other questions anyone has. So thank you.
All right.
Yeah, nice to meet you.
Hey, Michael, good to see you, man.
Thank you to each one of our panelists. Feel free. Feel free. Thank you so much. Very insightful conversation.